Today in crypto, record-breaking mountains of cash are sitting in accounts right now. Is this a sign the markets are about to pump? Or are we in for extreme amounts of additional pain? The latest DeFi news for you. Also, Ethereum may get some fee relief, and Bitcoin miners, they are running through their inventory with the effects of the Bitcoin halving working exactly as intended. My name is Lark, and this is where you subscribe for all of the hottest and all of the latest happening out here in the wild, wild land of crypto. Also, before I dig into the Bitcoin charts, I wanted to let you know that soon I'm going to be launching Wealth Mastery on July 8th. Now, membership to my newsletter will give you access to a weekly email packed full with just tons of exclusive information, tips, and insights to help you grow your wealth in the crypto markets and to stay ahead of the curve. Every week, you will get top news, an interview with an industry leader, a detailed research report on some of the top cryptocurrencies, market analysis on Bitcoin, Ethereum, and top altcoins, and just loads of other bonus material packed full of value. All of this stuff made by myself and my team will be carefully crafted for you to help you succeed in the markets. All of that for less than $10 a week. Now there's a link down below where you can sign up for updates about that coming launch. Okay, so on to the price of Bitcoin. Bitcoin remains wildly quiet, uncomfortably chill. You can see on the chart here just how tight the price range has been over the last few days. Volatility is coming. The only question is when. This coiling up has been crazy, man. So much just, We are approaching a line resistance right now for this shorter term downtrend that we're on the daily though. So maybe we can see a breakout happening there when we do start testing that line. That could come by the end of this week. But we have now confirmed multiple daily candles under the 50-day moving average, which short term is telling me that the Bitcoin bulls, they might be running out of steam. And if so, then we can expect further price decline for Bitcoin. But as I have said many, many times over like the last 6 weeks or so, that the market's just been ranging sideways, particularly Bitcoin. Obviously, altcoins been going totally crazy, which is awesome. But as long as we are above the 200-day moving average for Bitcoin, then we are in bullish territory. But that is the key line that we need to defend. And we're also not really in like full-on macro bull reversal mode until we breach and hold above $10,500 for Bitcoin. And to be clear, this number, 10,500, it is going to break. The only question is when, not if. A big thank you to PrimeXBT for sponsoring today's episode. PrimeXBT is a fantastic platform for trading a wide range of assets. You can trade crypto, you can trade top forex like yen and euros, top commodities like oil and gold, and stock indexes like the S&P 500, all of that tradable against Bitcoin and with generous leverage on offer. And PrimeXBT also does not require any KYC. Look, trading is not for everyone, and PrimeXBT is only for advanced traders who properly understand how to manage their risk. But if you are a trader, then there is a link down below where you can learn more. Okay, on to our first story of the day. Popular startup DeFi wallet provider Argent discovered a critical bug that could have led their users to losing funds. The good news is that Argent discovered this because their auditors, not hackers, were the ones to find it. But I share this story not to say that Argent wallet is a bad wallet. In fact, it's a fine wallet. It's a very interesting DeFi wallet. But again, to underline the DeFi risks, we're still so early. We're moving very fast. Things will be broken. Because you see, Argent, it is a DeFi-enabled wallet. And also, please, if you're chasing those high yields on DeFi right now, please be careful. The market is going crazy with the DeFi thing at the moment. Like that compound finance token, it's continued its pump over $300. It's absolutely wild. Crazy amounts of money are flowing into the compound finance app right now to be part of the crowd earning those comp tokens. The total value locked in compound has now surpassed Maker, which is just absolutely stunning to see. It only took a few days for that to happen. I feel like this token distribution model that they've chosen for the comp token by getting people to invest in the platform, that's something we're going to be seeing more and more of as the years move on. But also the total value locked in DeFi, it increased by $250 million over the weekend, now surpassing $1.5 billion. Almost all of that money was going into compound finance to try and get those comp tokens. Just look here at the chart showing how much Ethereum has been flowing into compound finance in just the last few days. It's wild. In other Ethereum news, miners are voting to increase the network's gas limit from 10 million to 12.5 million per block. This move is very important because it could actually lower transaction fees on the network, which could be a short-term positive for decentralized finance apps, which have been plagued by high fees in the recent months. Yes, I know we have lots of layer 2 solutions out there, but while we are waiting for all those layer 2 solutions to come online, a bit of relief in the fee market would be a definite positive for Ethereum. Over in Bitcoin land, the miner outflows of Bitcoin have dropped to a low not seen since early 2010. So this is the 7-day average of the total amount of Bitcoin transferred out of miners' addresses. It has declined to 987 Bitcoin a day, which is only 87 Bitcoin above the average amount of Bitcoin mined daily. The effects of the Bitcoin halving, they're already starting to be visible. This is only going to become more acute as this year progresses and as we move towards the next Bitcoin halving over the next few years. Although miners are still sitting on large amounts of inventory that were mined before the halving, the number of coins being sent by miners to exchanges is also at its lowest point in over a year. And you know what that means? It means that the next time we cross over $10,000, the miners are going to come on in and start selling their Bitcoin again, because that's what they do. That, of course, will create that downward pressure, which will probably result in yet another rejection above $10,000. It seems that above $10,000, miners are quite happy to just, dump their inventory on the market. But under $10,000, they only really sell it when they need to sell it to cover costs. This effect, it's not going to last forever. Eventually, the miner reserves, they are going to run low. And when that happens, up we go. Or, of course, we could just simply get enough buying pressure coming in from new retail people and new institutions and all that stuff that's just going to blast us right past that miner sell wall, but hasn't happened yet. Also, good news for Bitcoin stackers. The Bitcoin Pool multiple has dropped back into the green buy zone. Historically, buying under the 0.5 line has been a good time to buy. The tricky part, though, is that we could drop a lot further on the Pool multiple before we enter the bull market zone again. But really, honestly, right now, any buys of Bitcoin under $10,000, I personally feel like is a very, very solid play long term. And apparently a lot of hodlers agree with me, because 154 out of 170 of the last days have seen Bitcoin holders increase their positions by up to 233,000 Bitcoin. People who have been here for a while, they know what is coming, and they're taking that long-term view, and they're doing everything that they can to get Bitcoin in their accounts. And finally for today, there is a worrying amount of cash sitting on the sidelines right now, which on the one hand, that can just come in to pump the market up big time, but on the other hand is actually a sign that there's a lot of fear left in the market and that investors are potentially expecting a lot more market and economic turmoil, thus they are waiting out that turbulence. Money in U.S. bank accounts now stands at a whopping $15.4 trillion according to June figures. Deposits have in total increased by $2 trillion since January. Now, a lot of that can be attributed to, the pandemic-related handouts and all that stuff that was going on, but people who can afford to, they are not spending, they are saving right now. They're sitting on their cash, afraid to let it go, thinking that rainy weather may be ahead. Making negative rates, of course, even more likely, because that's how the government actually forces you to spend your money, by penalizing you for saving it. And nearly $5 trillion in cash is sitting right now on the sidelines as well, but in money market funds. Now, this is the biggest number ever on record. This money is sitting there ready to enter the markets, and when it does start to flow back into the markets, we can expect big pumps in the equity markets, big pumps in gold, and yes, probably big pumps in the Bitcoin market as well. The question then really becomes is when are they going to bring that money back in the market? But let's just take a step back here and ask ourselves for a second, why are big investors sitting on nearly $5 trillion in cash? Because they're looking at the big picture. There is so much pessimism or just really disbelief right now in the markets. You know, the S&P 500, the futures, it has just seen its biggest net short in around 9 years, meaning that there's still a lot of people who are expecting the markets to do bad, especially in the short term. Now, why is there so much fear and pessimism? Well, in case you haven't seen the news this year, there's been a lot of weird stuff happening, man, including a pandemic, which has just thrown this whole big just monkey into the wrench of the global economy. Angela Merkel of Germany, she is warning that the EU could be facing the deepest recession since World War II. The World Economic Forum is also echoing her concerns, adding in that this recession that we're facing right now will be at least twice as bad as 2008, which, as a reminder, was bad. Was not good. No. And the effects of this are being felt everywhere. India is likely about to enter a depression, going beyond, of course, just a casual recession. The USA is officially in a recession now. 40% of small businesses are expected to shut permanently in the United States. 1 in 4 Americans is food insecure, like 42 or 43 million Americans are now unemployed. And the coming housing crisis is just going to be more fuel on top of the fire. You see, the thing is that eviction protections, which were actually just extended for 2 months, but they're still set to expire in a little more than 2 months, meaning that millions of renters in the United States could be facing homelessness soon, and that millions of landlords will, of course, not be getting any rent. And that millions of people who are behind on their mortgages could also be foreclosed on. A whopping 30% of people in the United States missed their housing payments in June. Now, if those people can't pay their rent and mortgages right now, then how are they going to be able to pay their rent and mortgages in 2 months after they've been unemployed for 5 months and all they got from the government was $1,200? Meanwhile, of course, the banks have got trillions of dollars. Anyway, why is a recession so bad anyway? Well, it is really a sign of just a massive economic slowdown. Businesses are shutting, people are losing their jobs, and those who are not shutting their businesses or being fired from their jobs enter into a state of constant anxiety. Will I be the next one to shut my business or to lose my job? That fear, of course, leads consumers to cut back on discretionary spending, or really just spending overall, making it more likely that more businesses end up having to shut and that more people, of course, end up being fired, creating just a brutal cycle of economic pain. Even if all the restrictions on the economy right now were lifted tomorrow, and there is no second wave and all that stuff, and life just magically goes back to normal, well, an incredible amount of damage has already been done. Massive disruptions of this just incredible magnitude. They can actually take a couple of years to fully fix and unwind. And really all this free money printing, it's going to have dramatic effects in the long term. Global unemployment is expected to rise to its highest level since 1965. I mean, there's a real risk here that we could see another brutal correction in the equity markets. Even though, of course, right now the Federal Reserve is keeping the markets unhinged from reality by buying up corporate bonds and throwing money all over the place, but that may come to a point where it's simply not enough. And if the stock markets, catch a cold, well, then Bitcoin tends to as well. So something to keep in mind for those of you out in the markets looking at what's going on. The big picture, there's still a lot of fear. There's still a lot of uncertainty. No one knows for certain what's going to happen. Are the markets going to crumble viciously, or we're just going to keep getting enough free money from the Fed to make everything kind of okay? And with the recent correlation of Bitcoin to the equity markets, it does, of course, warrant a bit of concern. Anyway, those are just my 2 Satoshis. Your question for today: do you see these record amounts of cash sitting on the sidelines of the markets as a good thing, since they can come up and just pump the markets up, baby? Or as a bad thing, since it probably means that the markets are in for a lot more turbulence and you should put your seatbelt on? Let me know down below in the comments section. Thank you so much for watching today's video. As always, I massively appreciate your time. So thank you so much. Hope you're having a freaking awesome day wherever you are and whatever you are doing. Long live the blockchain, and peace out till next time.